If you have been losing money trading support and resistance strategy, is because you've not seen what I'm about to show you in this video. Because in this video, I'm going to show you the right way to trade support and resistance. And the reason why you fail is because of some basic flaws that you have been following. One of them is that the support and resistance must have multiple touches. This is a fallacy on its own, because when a level is touched so many times and you're about to take a trade just because it's a level of support, that simply means that level is a weak area for you to start looking for trades. What happens is that when the market opens here, trade down, and this level pushes price up, come back to an area of resistance, and that level pushes price down, come back to another area of support, this movement is creating support and resistance. Not that the support and resistance is responsible for the movement. What you are creating here is simply called liquidity. Now, the moment you are coming in at the third touch or fourth touch or fifth touch or whatever touches you are coming on that support and resistance, the probability of it pushing price down is very low. And that is why you keep getting stop out of your trade. And that is why you keep getting stopped out of your trade. What most people do here is that they look for entry here and then they place their stop loss somewhere above the support or resistance here, entry here, and they try to target the next area of support. But what happens most times is that price trades higher, take them out, and eventually sometimes push higher or even come down for a movement to respect the real support and resistance area before pushing up. So these multiple touches is the reason why you are failing, because you are becoming a liquidity to the market makers. Same thing with the area of support here. You are coming back after 1, 2, sometimes even 3 touches. That is a wrong approach, because the moment you start looking for trades here, this level is now a low probability. The probability of succeeding here becomes very low. And by the time you take your trade here with your stop loss just below, market will eventually take you out, because you are trading support and resistance after the market has already created its move. And then number 2 fallacy is that they will tell you the area of support and resistance is a zone. You treat area of support and resistance as a zone instead of a single price. When you treat it as a zone, there's a confusion there. The confusion is, how do you know when the support and resistance is broken? How do you know if the support is broken? Is it when the candle closes above the zone? Or if we have a strong close in here? Or we have a bullish engulfing? How do you know? It becomes complex. When you look at that support area like a zone, it becomes complex. The same thing with the resistance area. In this case, support area here. How do you know if this zone is broken? Is it a very strong candle or a very small candle closing above that zone? How do you know? This again is a puzzle on its own. It creates subjective reasoning. Some people will say, okay, if they see this, if they see that, but when you are looking at trading, there should be consistency. And because you lack consistency in your strategy, you keep getting stop loss here and there. So there are ways you can take correction from this. And that is what I will introduce to you right now. And that support and resistance we are looking at is the opening price. So in this case, you are simply marking a price level on your chart. You are simply marking a price level on your chart. And these price levels have two forms: the tested and untested levels. I prefer the untested levels. That is when you draw a chart level and price has not come to it. It is better compared to where you have multiple touches. You just want a single touch before you take your decision to sell in area of resistance and a decision to buy in the area of support. A single price, not a zone. And then number two fallacy here, you have eliminated what? The zone theory. So in this case, if I get a close above this price, I know that the support is, the resistance is broken. If I get a close below this support, I know it is broken because I'm looking at a single price. If I get a rejection on this level, I know that support or that resistance is holding, and I can take a trade. Once it meets my order criteria, I'll take a trade and aim at the next support or resistance level. Now, the tested area is when the wick is being shown on the support or resistance area. That means price has rejected from that level in the past. I'm going to talk more on tested and untested in subsequent videos. But this is simply an introduction to support and resistance trading strategy using the opening price. And I'm going to go to the chart and show you how you can identify this. Now, how do you know the lines to draw? That's another good question. How do you know the lines to draw? Now, we have different types of support and resistance. The first one is when I called the reversal opening price. How do you identify the reversal opening price? Reversal opening price. Let me type it here. Reversal opening price. Then we have the continuation opening price. And we have the Quasimodo. If you want to know more about this, I have a mini course. It's free. Link is in the description. I'm going to introduce the rudiment of the opening price trading strategy, the types of opening price you need to know, and how you can approach the market with it. So now, once you identify your reversal opening price is simply when you see two different candles, one bullish, the other one is bearish at the same time. The first one being bullish, the second one being bearish. This becomes a resistance. All right. So you simply draw a straight line across it from the opening price of the bearish candle. And in a situation where they don't align, you look at the closing price of the previous candle there. So this serves as your resistance. So that means if price comes into this level, what you do is to look for a sell opportunity. Once it meets your criteria of a sell, meaning the market is bearish. Same thing for support. You have the candle here. This is a bearish candle, and we have a bullish candle. You simply mark out this level. This becomes your support from the opening price. This is called reversal opening price, meaning price, the first candle went in one direction, the other candle reverses in another direction. This first candle goes in one direction, which is upward. The other candle reverses in the other direction. Example on the chart here. Let's look at example of this opening price on the chart. You can see another a good example here is one is here, reversal opening price here. One candle, the second one is bullish. This is bearish, bullish. You mark here. This is your reverse opening price, and there are areas of what support. For example, here, this is reversal opening price. This is reversal opening price. Yes, you are correct. This is reversal opening price here. Okay, you can identify them on the chart. All you need to do is to look for two different colors at the same place. This is reversal opening price. This is reversal. They are everywhere on the chart. All right. So what you do is, in a bullish market, when price trade back into that area, like in this case, you can see that price rejected from that area. That is the reverse opening price in place. So the other opening price is the continuation opening price. This is simple. From the word continuation, it means we have a bullish candle here, and then the next candle continues in the direction of the previous candle. So you simply draw a straight line in between them, more like a hidden base. Yes, more like an hidden base. You cross it across so that when price comes, it serves as your support. Same thing with a resistance. Same thing with the resistance. We have two bearish candle. Two bearish candle. One bearish, the other one also is bearish. So you draw a line across so that when price comes there, you want to start selling based on the directional bias. And how do you identify it on the chart? If you go to the chart now, you see we have it here. Continuation opening price here. 1, 2. Continuation opening price. We have it here. That's your area of support and resistance. In this case, this is resistance. For this is support, sorry. And for resistance, you have them here. Yeah, you have them here. So this is how you identify them. You go to your chart, if you go to your daily time frame, you're going to see it play out well. Okay, all you need to do is to look for two candles with the same color. You mark the opening price, and that is where you want to start trading from. Like there, you can see how price came back in here and then push upward. When price wants to move, it moves from the opening price. That is just a trick. It moves from the opening price. As you can see, I'm not marking zones so that I can easily know if a level is broken. The next one is the Quasimodo. Now, Quasimodo is very simple. This is how Quasimodo is. You have the reversal opening price here. The opening price, you mark it out. Once we have a trade up and a trade below, closing below this, then you have a Quasimodo. So when price comes back in here, this is the opening price you are looking at here. More like an head and shoulder, but with a Quasimodo look. Quasimodo, QM. All right. And a good example is, let me go to. Now, this is a good example. Once price comes in here, this is a good area to sell because this is a Quasimodo. You can see a close above it. The opening price close above it and then close below. So that is a Quasimodo there. This is also a Quasimodo here. But in this case, price didn't come. Unlike regular Quasimodo, you can trade any other opening price that is above the peak here. Can be used as what? The Quasimodo. So we have multiple of them there. If you want to learn more about this, join the mini course. It's free. The link is in the description. And also, currently, I'm doing a promo for you to join my mentorship. Just $400 have been removed from the original price for a minimum period of time because we're in the half year of the season. I want to give opportunity to people to learn and become profitable in the market. So the link is in the description. And if you have not subscribed to this channel, make sure you do subscribe, share this video so that it gets to more people like you to improve their trading as well. So more example of Quasimodo is simply this reverse opening price is lower than this. It broke this. So when price come here in the future, that's where you start looking for trades. A good example where it works is here. You can see here. You mark the reverse opening price that was broken downwards for a support and for resistance that was broken upward. So in this case here, this was broken upward, went up, price came back to the Quasimodo, and then from there you push higher. This will be a form of series. I will do more on that. I will show you more of the opening prices. We have two other, which I will not explain here. In the next video, I'm going to explain that. So let's look at how we can use this to trade. But before then, what are the things you need to know when you are trading the opening price? All right, the time frames to use. The time frame where you draw this opening price is on the monthly, weekly, and daily. You only draw this on the monthly, weekly, and daily. This is used for direction. This higher time frame here, monthly, weekly, daily, are used for direction. Then your entry are the H4 and H1. Still use the opening price, narrow it down to the H4 and H1. I'm going to do more videos on that to explain. But this is simply a form of introductory. This is what you should be doing. So what I will do here is simple. For example, you can say that the market is bullish. The bullish in the sense that there are certain rules we put in place, but you can see that the market closes above a resistance. All right. So when it closes above the resistance, all you need to do is to start looking for trade entries around the opening price. In this case, let me change this to weekly. So one of the ways is we can see how price return back to this area. Now, this area where you start looking for trades. If you go to your lower time frame, you can refine that area. Look at it here. You can refine it to the daily. There. This is the daily. You can see how price came into the daily and then push higher. You can either take your full shot here, or you refine to the 4-hour and take your entry there. You can refine to the 4-hour, either as when the market is operating here or where the line comes from. So as you can see, you can refine this to this level. We will have a level here that is exactly the same price level there. You refine that for better entry. And as you can see, price came in. And then you hold your trade, aim at whatever you want to aim. There are ways we know where to aim at. Most times, price moves from daily to daily, monthly to monthly, and weekly to weekly. So if a weekly time frame is bullish, it has to go straight to another weekly level. All right, weekly to weekly. That means from here now, you'll be targeting this high here. You'll be targeting this high, this weekly resistance here, Quasimodo, reversal opening price here. Okay, now what do you see there? You can see that when price approached, it broke above it. signifying to you that price wants to continue pushing higher. Came back and retest. This is another type which I will talk about in my next video. It broke, came back, retest. That's an area for you to take a trade. If you go to a lower time frame, you can refine it down to the daily, and then you pick your trade from there. And if you do this consistently, practice it, and you want to learn faster, you can join my mentorship, and I will show you how to achieve this very fast. You don't need to spend so much hours studying. All you need to do is to get the rules. Once you get the rules, you apply it. Within time, you understand how the market moves. So if you have any question, put it in the comment section. And don't forget to like, join the mini course, and also join the mentorship now that there's $400 discount. So take advantage of this, and I will see you in class.